Righto, boys. We're moving on to special journals here. Now, there's the next two chapters are on special journals. The first one's credit journals. The second one is cash journals. So we'll be basically looking at this for the next probably 2 weeks, I'd say. So when we were looking through chapter 3 and we were doing all the ledger accounts, we would have found that although it was really good for reporting or recording individual items for in business reports. So, for example, the purchase of an asset, things like that. For transactions that were happening every day, there was a fair bit of repetition involved. So basically, it meant that we were kind of clogging up journals just with transactions that sort of happened every single day, and had exactly the same, I suppose, credit and debit entries. So if we have a look at this example here, Lennon McCarthy is a shop that sells sheets, towels, and bed linen. Its transactions for October were as follows. Now, all these transactions have exactly the same debits and credits. So for every transaction that we've talked about there, we've got a debit stock control, we've got to debit GST clearing, and we've got a debit creditors control. So here's how it would look in the general ledger. So the stock control, notice here, lots of repetition here. So they're all exactly the same. Then we go down here, pardon me, then we go down here, all these here are exactly the same as well. So they're exactly the same transaction, just occurring on different days. And the same deal here with the creditors control. So basically, what the special journal does is it basically records all the transactions of a particular type. Okay, so the four most common are, oh, sorry about that. So basically, the special journal records all transactions of a particular type. The four most common special journals and their transactions are these ones. So you've got the purchases journal, and that. So we really need to be writing these two down. So this definition here and this here. So you've got the purchases journal, which is what we're going to be having a look at today, or the PJ. That basically looks at the credit purchases of stock. So basically just looking at the transactions that we have with our creditors. So what we do is when we record a transaction that we're having between ourselves and a creditor, we add that into the purchases journal, which can then basically be used to summarize all the transactions of a similar purpose. So, for example, between us and our creditors, so that then the summary can then be posted to the general journal. So basically, it just reduces the number of transactions in the general ledger, which obviously improves the efficiency. It just basically just removes clutter out of the general journal. Now, this bit here is really, really important. Every transaction must be recorded in a journal before it is posted to the ledger. So that basically means that all the transactions that happen for the month get posted into the purchases journal, and then that summary needs to be put into the general ledger. So we can't have some summarized and then some going directly into the general ledger. We have to have all the transactions put into the journal before it then gets posted to the ledger. Now, what I will get you guys to do is we need to knock over review questions 5.1. So, okay, now we've knocked that over, we can move into the actual, I suppose, processing or use of the purchases journal. So as we stated, all the transactions basically fall into one of these three categories, whether it be a stock control item, GST clearing, or creditors control. So these transactions can be summarized in the purchase journal to allow the total credit purchases of stock to be posted to the general ledger at the end of the month. Okay, so we can see an example here. If I just change the view to 2 pages, we can see here that, so we can see the transactions here. So for example, the purchase stock on credit from Marks & Co. So $230 plus $23 GST. Oh, mistake. Wrong way. Okay, so we can see here that that transaction is then summarized here. So we've got the creditor here. The other thing with this too is that it gives you the ability to know, who you owe, which is obviously a good thing as well. It's got the invoice number, so the stock control 230 plus the GST of 23 there, as discussed, gives us a creditors control. Wrong way with the creditors control, which is obviously stock control, the amount that we purchased of stock plus the GST, because that's obviously how much we owe, is $253. So look, pretty straightforward in terms of how that works out there. Okay, so just a couple of quick things in this page. I don't want to go sort of too hard into this, but I'll give you a couple of things that we need to have a quick chat about. So although the totals are posted, will be posted to the general ledger at the end of the month, transactions recorded in the journal must be recorded with the date that they occur. Okay, because this is very important to, obviously, as it says there, very important for the individual creditors. It means that we know when our bills are due. This is also very important. So all the transactions will be recorded in the one creditors control account, but because the business got more than one creditor, we've got to show the individual name of that creditor so that we know exactly who we need to pay and when we need to pay them. Now, we've just got to remember that we're removing detail from the general ledger. We're not actually removing detail, period. So then obviously the invoice number, so that we can ensure that we've got reliability of the source document. Stock control is obviously the value of the stock that we hold is going up because we've purchased stock. GST obviously adds to what we owe, so needs to be charged. Doesn't actually affect the valuation of the stock, as we've discussed previously. And then the creditor's control account is literally just the amount that we owe to the creditor, which is the amount of stock purchased plus the GST. Now, when we post to the general ledger, we just see that instead of having all these transactions here, in the stock control, we just take this one and so we just take this summarized figure and we put it straight into the stock control in the general ledger. Then we take this summary figure of the GST stock control, the GST control clearing, and we put that into our GST clearing account. And if I just move that down there, so 1672, as we will see, goes in the creditors control account as stock control GST clearing. Okay, so that's it for this installment. What I'll need you to do now is do the review questions 5.2, so this here, and we'll see you bright and early tomorrow morning, boys. Take care.